So, it's been a really good year for the market, 2019, despite the fact that first quarter earnings estimates have really tumbled like a boarder. Think about this. Last September, all S&P sectors were seen as growing big time. Now, 8 of 11 are seeing actually declining year-over-year earnings. Some sectors, in fact, seeing significant declines. Energy went from a potential gain of 40% to a decline of 18%. So if earnings estimates are going down, what's driving this market up? We brought in Point View Wealth Management President David Dietze and Simpler Trading founder and CEO, author also of Mastering the Trade, John Carter. John, how do we reconcile the dramatic decline in earnings estimates in the last 3 or 4 months and the fact that we got up to an amazing start for 2019 and we're seeing pretty good result today?
So a big part of this is that it's the reality check that the markets care less about earnings than they do about two things, the Fed and liquidity. And when Powell came out last year and essentially stopped raising rates in the face of continued rising wage inflation, and the first time ever they said, you know what, based on the stock market price, we're going to actually take our foot off the gas pedal here and actually start taking a more dovish stance. It really does show that the central banks of the world are essentially beholden by asset prices at this point. If asset prices start to fall too much based on their policy, that is going to put us into an economic tailspin.
Then they've crossed the paradigm. This is a major paradigm shift. They can never go back. Because if you start to pull back, asset prices are going to go down and it's got to come back to the rescue.
Exactly.
So this can go on for a long time then.
It can go on for a long time.
You agree, David?
Yes, I do. I mean, here's the thing. Earnings are important, but also the multiples that investors will pay for them. And now that, Jerome Powell and the Fed is off to the sidelines and is allowing a very tame interest rate environment, I really believe we can see multiple expansion this year. Of course, the other key issue, of course, is the Chinese trade negotiations. We got great news yesterday where there's some sort of an agreement in terms of not trashing the yuan currency. And so I think both of those things can allow stock prices to go higher because, remember, stock prices won't look back at Q1 earnings. They're going to be looking forward to the rest of the year.
Just a moment ago in the briefing, we heard that there's no date yet set for the China trade deal. Didn't upset the markets at all. John, at this point, Wall Street expects perhaps a deal to be done. And as long as we don't see these these tariffs go up, everyone's pretty cool with waiting, right?
A lot of this stuff right now is priced in. They've seen the back and forth. I think the biggest thing that the market realizes that China wants a deal. They are bending a little bit. And the idea is the expectation is that, all right, now we can be patient. It's going to come. And in the meantime, if for some reason it falls apart, that's something I think actually the market could absorb fairly quickly.
Absorb? Like after it goes down
5-10%.
Okay.
It's the classic. I always, joke. It's like, yeah, you want to keep buying the dip until it doesn't work.
All right. So this morning we saw also, I think, the market had a great sigh of relief. The consumer isn't dead. At least wasn't in January. In fact, very, very strong. You start to strip out things like auto and gasoline, a very strong consumer. We're not sure what happened in December. My theory is that America's media almost talked us into a recession. But looking forward, is this consumer strong enough, 2/3 of the economy, to keep carrying it like this?
Well, I think it is. There's no question that we all breathed a big sigh of relief when we saw a better retail sales number for January. December was a disaster. Of course, that moved down a little bit. But we're also looking at other factors like confidence. For example, we're seeing, confidence metrics looking very good. And, of course, as the consumer being about 2/3 of the economy, that's so critical.
John?
Yeah, they're continuing to buy Starbucks, Budweiser, and going to the movies and going to Disneyland. And as long as they've got the incentive to do that, we're going to start seeing consumer spending strong.
So you sound like you're bullish.
It's a closet bear who's bullish.
A closet bear who's bullish. Okay, I'll write that down. David, I know where you stand. Thank you both very much.